Hi, for those of you who just joined, just sit tight and we are going to let people get some time to get logged in. We'll probably get started about a minute after 10, okay? Just sit tight. Thank you. Hi, for those of you just getting logged in, just sit tight and we will be getting started about a minute after the hour. Thanks. Hi, for the group that just got logged in, just sit tight. We're giving people about a minute after the hour to get logged in. Probably have some late scragglers. Just sit tight, okay? Thank you. Okay. Well, I think we can get started now. Hello, everyone, and welcome. Thank you for joining us today. My name is Sam, and I'd like to introduce Kenny Kwan from Rivington Partners, who is with us today. I'll be hosting Kenny today, and today we will be going over a topic that I think all of you have in common, and that's where to place all of these tough brush risks, right? J.E. Brown understands your pain points, so we're doing our best to continue to give you new markets, and Rivington has proven to be a great option. Our partnership with Rivington has allowed a good amount of our producers to be able to help with their clients' needs, to just basically have a robust and comprehensive homeowners policy, all while writing it on limited paper, which is today's world is kind of unheard of. With that being said, we are hoping that after today's session, you'll feel confident about how to go about shopping your risks with Rivington. So it's our intent to make this session as informative and as educational as possible. And keep in mind that I will be sending all of you a copy of today's presentation as well. Okay? So, 1 second. So we'll be going over a few items with you today. This is my portion. I'll be going over our website and how to pre-qualify your risk for brush. Then I'll explain how to find the Rivington submission button. Then what I'll be doing is handing over the controls to Kenny so he can take over today's session. And then at the end, we'll leave the floor open for some questions, and hopefully we'll be able to answer all of them. And if for some reason I can't or Kenny can't, we'll be sure to get back to you with an answer, okay? And keep in mind that you are in listen-only mode, and your questions will need to be typed out, okay? So with that being said, let me get started here. So Rivington Partners works in connection with American Modern, and what that means is that in order for Rivington to consider quoting your risk, you have to have documentation proving that American Modern won't take your risk due to brush. And there's two ways to do that going through us. You can get a brush map, or you can go through American Modern's quoting platform. American Modern's quoting platform is called AMIG, and they also have a screen that pops up when they don't want a risk due to brush, due to their appetite. So the first way I'm going to show you is to get a brush map. There's two ways to get to it. One of them is through the Services and Support tab. You have this Wildfire qualification link, and the other is here under the Fire link. And that is where this link lives as well, the Wildfire qualification. And all you do is just fill in the blanks. Pretty easy stuff. I'll just zoom through this really quick. And with minimal information, you just basically submit. And what you're looking for after you get your submission going through is you're going to get this response that looks just like this. This is an emailed response, and it says American Modern no. And that's the ticket to get your Rivington quote, okay? So this is one way of doing it. The second way of doing it as well is if you go through American Modern's quoting platform, and some of you may already be familiar with this little screen here. You may have gotten it by mistake, not by mistake, but it may just happen when you're quoting something. You get this risk of, dwelling is located in a high firewire risk area. What you want to do is this is the second way. You just save the screenshot as well. And when you have this piece of information along with your brush map qualification result, either piece of information is your ticket to be able to get Rivington to consider your risk. Okay. Now, when you have either piece of information, what you want to do is you want to get to our Rivington submission link. So you have to be on the dashboard, which is the working end of our website. Scroll down, and if you're familiar with our website, you know all these links here get to where you need to go. You scroll down a little bit further, you find Rivington here, okay? And then you have some pre-qualification answers here. And what you want to do is you answer them correct, or if not, you're not going to be able to submit business. So this is the main one. Do you have that brush declination? You click continue, scroll down a little bit further, and then what you do is upload your application along with either form of documentation that American Modern won't accept your risk due to their brush appetite. And you submit, and you've got, we're asking for about 72 hours for a turnaround for an indication. That is to get your Rivington quote going through us. Now, Kenny is going to explain a lot more information, appetite, how to submit business directly, and then he'll probably go over some of the quoting process as well as a reminder to go through us. And Kenny, I'm going to hand over the controls over to you now. Just hold on 1 second. Is that working for you now, Kenny?
Yeah, I'm trying to see which screen it is. All right, Sam, can you just let me know if you can see my screen okay?
I do, yes.
All right, beautiful. Thank you very much for joining us this morning, everyone. We really appreciate your time. Kenny Kwan, Vice President of Marketing and Sales for Rivington Partners. On behalf of Rivington Partners, we are thrilled to be working and introducing this program to some of you. Some of you have already worked with us in the past. We are thrilled to be, due to your relationship with J.E. Brown, that you have access to our program. So with that, we will get started. This is kind of a little bit about what we're going to be covering today, a little bit about Rivington. Who is the client fit? Appetite for the program, ineligible risks, coverages, the underwriting process, the inspection process, a little bit about our wildfire specialists. And as Sam noted earlier, if you have any questions during the presentation, feel free to use the chat function and we will get to those when we have a chance. So Rivington Partners is a managing general agency. Some may just like to refer to us as an MGU because on this program, we manage everything on behalf of American Modern except for claims. Claims are all handled by American Modern's normal claims team. So it's a normal, same phone number that you would call there, but in order to get a claims process started. But from underwriting, marketing, customer service, billing, we handle everything else besides that, besides the claims function of it. So our approach is a little different. So if you're familiar with a lot of other carriers, what they do is kind of what AM Suites does. They have their system already pre-programmed. It's called a bypass system. So meaning you go in there, you put in some information about the home, and the system will tell you whether or not the risk is acceptable. We are different. Like Sam mentioned earlier, the ticket into the ballgame in order for us to consider a risk for this program is that declination from American Modern due to unacceptable wildfire scoring. After that ticket comes in, we get the submission. The underwriting team does not refer back to that wildfire scoring. They're looking at aerials, they're looking at past burn map histories, wind patterns, property lines, MLS photos, listings, whatever information that they can pull online about that property to see whether or not we can get a comfort level with offering an admitted quote to you and your customers. I was kind of going over the process with an agent before, and he was telling me, he's like, well, Kenny, in our area, our aerials are really bad. He said they've been outdated. They're a couple of years old. And he said, but a lot of insurers have been non-renewed, or they understand that the dangers of fire holds right now. So they've done a lot of things to make their property safer, you know, cutting down trees, landscaping the whole property. So my response to him was, he goes, well, can you get us pictures of that? What the property looks like now? His response was, well, underwriters don't want to look at all that. I was like, no, absolutely. We want to be able to take all that into consideration. So current photos of the grounds that they look like now, prior inspections, things that give the underwriters a view of the risk that they normally wouldn't have. All of that is appreciated because it is an admitted program. We're not going to be able to offer on every single submission that we get to us, But the more information that we have, the better we're able to make a determination whether or not it would be a fit for the program. So his term that he used to me when I was describing that process is a term that I stole, and I think it's the best way to describe what our team does. It's old school underwriting using new technology. And we truly want to be able to take all of that information and underwrite each risk based on its own merit. Who's a fit? So, this is kind of something that's interesting because we're not going to be a great fit for everybody out there. We don't want to waste agents' time. In this day and age where a lot of carriers aren't looking to write this type of business, time is of the essence. And so we want to make sure that when we're getting a submission that they are what I like to call good submissions that we, both J.E. Brown and Rivington has the opportunity to write. So who's a fit? So we're really good fits for agents and clients that are looking for an admitted comprehensive HO3 policy. For agents and clients that are looking for one policy versus a California Fair Plan and a DIC. Quite frankly, I tell agents all this all the time that we are not built to beat Fair Plan in a wrap. It may happen occasionally pricing wise, but that is never our intent. So if you have an insured that maybe they're in a situation where they're on a very limited fixed income and they can't afford to pay more than the cheapest premium out there, you know what? We're probably not a great submission for you. It's not. We're not going to have great hit ratios on there. So we just want to be open and honest. But for people that are looking to get out of Fair Plan, looking to have one comprehensive policy, great fits for it. And we've been able to help a number of clients like that. For agents and clients that are looking for no wildfire deductibles and wildfire coverage limitations, by that, if you're familiar with what's going on now, especially in the E&S market, a lot of the E&S carriers right now are offering coverage, but they're offering very limited coverage. They're applying a large wildfire deductible. I've seen up to 30% coverage A deductibles on some of these. They're having wildfire coverage limitations, meaning if the home burns down due to a situation because of a wildfire, they may limit coverage to $1 million total. So we don't have any of that. Our deductible is for all covered perils on it. So if you select $2,500, it applies for a fire loss as well as a theft loss. So we don't have any kind of wildfire deductibles or wildfire coverage limitations. And usually we get the question from an agent. I had one last week where the agent was like, well, they got an E&S quote. It's less than your quote. And I said, well, do you have a copy of the quote? Can I take a look at it? They sent it over to me, took a look at the quote, and I was like, well, does the insured realize that there's a 25% wildfire deductible on this one? And his response was, no. Where did you find that at? And I was like, well, it's a little asterisk next to your normal peril deductibles on it. So once he found that out, the insured said, okay, that $500 difference wasn't big enough for him to make that decision to go with that E&S and ended up going with us. So our deductible is our deductible. We're great fits for clients that are looking to get a detailed wildfire inspection report and find out ways to make their specific home more fire resilient. We'll talk about our wildfire specialists, but our wildfire specialists all come from a firefighting background. So they're coming from a place of knowledge and actual experience. There's a lot of third-party companies right now doing these wildfire consultations on the buzzword usually you hear is home hardening. They're going to give you some good ideas on how to make your home safer from a wildfire perspective, but that doesn't have any effect on insurance. Doesn't necessarily guarantee you're going to get insurance. Ours actually, we're the insurance people. These are our employees that are doing these inspections. So when they're giving recommendations and requirements on it, it truly has an effect on their insurance. For agents and clients that are looking for an AM Best A+ rated insurance carrier, American Modern Insurance Group is A+ rated by AM Best. In case you're not aware, they are owned by Munich Re, so they're part of the Munich Re family. So one of the largest reinsurers out there. And lastly, on this case, for clients that understand insurance is not a commodity. If you're looking to buy the same car with the same features, of course you want to go with the lowest price on that. But insurance is not a commodity. There are higher costs associated with purchasing an admitted comprehensive policy to protect their home. So. Appetite. So like Sam mentioned earlier, because of the filing, so American Modern has two admitted programs in California, the one through AM Suites and the Wildfire program. In California, there's a best pricing law basically stating that if you're providing Mr. Smith a quote in the Wildfire program, you have to be able to determine why he's getting a quote in the Wildfire program and not the AM Suites program. And in order for our team to consider the risk, once again, it has to be declined due to unacceptable wildfire score. So like Sam pointed out earlier, the message that you'll receive is dwellings located in a high wildfire do not bind coverage on this risk. Once again, that's the ticket into the ballgame in order for us to consider it. If it's declined for any other reasoning, we cannot consider the risk as much as we may want to. You know, a good example would be, I know American Modern has some moratoriums in some areas due to saturation. If it's declined just because of saturation, we cannot consider it. If it's declined because of unacceptable wildfire score and saturation, we can consider those risks. So max coverage A for this program is $4 million coverage A. And when I say max coverage A, that is all we can do. Previously, I worked at Chubb for 12 years, and you know, it's a situation we did an inspection on a home, comes out higher than the submitted amount, we can just increase it. On this program, if let's just say the submission was at 3.5 million, we go out and do the inspection and turns out that it's actually 4.3 million, we would have to cancel the policy midterm. So we would much rather not put anything on the books that we have to cancel midterm. We don't want to put you in that situation where you also have to remarket it just because the coverage A is too large. So we get a number of submissions that gets around that 4 million mark. If the underwriter's looking at it, they may put it through their cost estimator. They may reach out to our inspection team to get their expert advice as well, because we want to make sure when we offer you a quote and we eventually bind this policy, that we feel comfortable that it's going to come out less than that 4 million so we can stay on the risk. Another good point here too, as I'll bring up, is AM Suites, their core program, the max coverage A they can go to is only $1 million, and we can go to 4 million. So if it's declined just because it's over $1 million, but not because of the wildfire score, we cannot consider that risk. It has to have that wildfire component declination in order for us to consider it. For risk $2 million or more coverage A, we do require central fire and burglar alarms. If the home is 1.5 million or above, we at least require the central fire alarms. For secondary homes, we require both alarm systems at 1.25. It is an admitted program, and I will mention that a number of times during this presentation, just because a lot of people associate, oh, you guys are willing to write risks in quote unquote wildfires, you have to be ENS. Nope, we are admitted. So the home should be in good repair, should show pride of ownership. Minimum of 30 feet defensible space, we'll kind of go over that a little bit too. Modular homes we can consider as long as they're on a continuous masonry foundation with a pitched roof. We cannot do mobile homes. We cannot do manufactured homes. They have different building codes for those, so we cannot consider that for this program. Electrical, heating, plumbing, and systems and roof should be in good working order and meet all local building codes. So generally the question I get from agents there is, how old does the home have to be before the underwriting team starts asking about updates? Good rule of thumb is if the home is 20 years or older, the team may inquire about updates, but keep in mind too that they are looking at aerials, they're looking at all the information they can pull online, they're pulling up county records a lot of times too. So if they can tell that the roof has been updated, they may not inquire about it. However, if the only picture that they have is an aerial that's 3 years old and it appears that some shingles are lifting at that point, we of course may ask about the updates to the roof and any kind of documentation on that. Cost estimator. Cost estimator that we use is a system called E2 Value. It's a system that we use at Pure Insurance when I was there. It's used by a lot of the high net worth carriers. We picked E2 Value because we figure in a lot of cases, it calculates things a little more closely to the actual losses that actually do occur. Takes into consideration things a little more heavily than some of the other cost estimators out there. Location and slope are huge driving factors on your costs, for not only for your labor costs, but also for your inventory delivery costs on it. Locations, if it's a remote, gated community, hillside, access roads, built on a steep hillside, a steep slope, all of that are going to add onto your cost. You know, there are certain areas that don't allow you to keep things like a dumpster in a property overnight. So you have to account for delivering that dumpster there during the day, having it removed at the end of the business day. So all of that needs to be taken into consideration. Attached structures are another huge factor on there. You want to make sure that if they have an attached wraparound deck, if it's 1,500 square feet, that's going to add on significant costs to your coverage A. And we want to make sure that we're providing adequate coverage on there. Demand surge is definitely real out there. In a prior program that we ran, we had an insured that lost a home in Paradise Fire. Wasn't a huge home, 700 square feet. Unfortunately, when she had her home destroyed, she was having difficulties finding a contractor willing to work with her. A lot of it had to do with the fact that it was only a 700 square foot structure. So, from a contractor standpoint, they can build a 2,000 square foot home, make more money, or a 700 square foot home. But when she was able to finally find a contractor willing to work with her, he was charging in excess of $700 a square foot to rebuild that home. So demand surge is something that no cost estimator can really account for. That's why it's so important to make sure that we are providing you the adequate coverage in case there is a loss on there. Appetite for the program. We can consider PC 9s and 10s. Those are really accommodations, but if the underwriter likes the risk, they will provide a quote proposal out there with an unprotected questionnaire. I'm sure you guys have seen unprotected questionnaires with every carrier out there. It's very similar. You'd want to make sure that you get that back to J.E. Brown and submit it back to underwriter just to make sure that the quote is accurate and the premium is accurate and the risk is still acceptable on that end. So generally the question I get from agents there is PC 9 or 10, when should we just not make that submission to your team? If the fire department is 7 miles or more away, those will not be acceptable. Knob and tube aluminum wiring, it's going away, and thankfully so. But if you had a risk that had knob and tube or aluminum wiring, if it's less than 10% of the total square footage of the home, and it's been inspected and approved by an electrician within the last 2 years, we can consider it. We can consider supplemental heating sources of a wood burning stove. It cannot be a primary heating source. It can only be a secondary heating source. There is a wood burning stove questionnaire that is required on it. Basically, it's asking, was it professionally installed? Is it professionally cleaned? You also want to make sure that when you make that submission to J.E. Brown as well, that you do indicate that the home has a wood burning stove if it does, because it will affect the cost of the premium slightly on it. Homes built pre-45 or built on landfill or sand, we do require an automatic gas shutoff valve. If the insured does not currently have one, but is willing to install one, then that is something that we can consider. We usually can give you some time to get that complied with on there. So once again, if they don't currently have one, but are willing to install one, that's kind of the key there, that they are willing to install one, then we can consider that risk. Risk with employees, kind of the key thing there, guys, is what we're trying to capture is any kind of commercial exposures that we should not be insuring. So your normal situation, your housekeeper, your nannies, your gardeners, your landscapers, we're looking for the scope of employment and how many hours that they are working, just to make sure that if we are providing that workers' comp, that we have that accurately rated. And like I said, also to avoid any kind of commercial exposure that we should not be insuring. Trust or LLCs, the key term there to remember is for personal asset management only. So your normal situation of husband, wife, immediate family, trust or LLC that's created for tax purposes or asset management, those are fine. There is a questionnaire on it, needs to be filled out. You also want to indicate that they do have a trust or LLC on there. We want to make sure that if there's any kind of commercial exposures or entities that are created specifically for income basis, we wouldn't want to insure that. So kind of a big red flag is if you have a trust or LLC that is composed of unrelated entities, that usually is a red flag that there is some kind of commercial exposure that we should not be insuring on. Once again, it's an admitted program, so we're not building the book off of homes with prior losses. We already have the wildfire component to kind of worry about as well, so we're not looking to build the book on homes with prior losses. That being said, we will consider them. What the underwriter is really going to want to know at that point is what happened in the loss. What measures did the insured take to hopefully prevent a similar loss from occurring in the future? So when you're making that submission in, as many details as you can provide about the loss would be helpful. We do underwrite for a 7-year loss period. We only surcharge for 3 years. If they're loss-free within 7 years, there's a slight rating factor on that that gives them a little credit on that end. So, but we do want to know any kind of losses in the last 7 years. Risk with horses, as long as it's for the insured and immediate family's own enjoyment and usage, that's usually fine. There can be no stabling of anyone else's horses, no riding lessons. Technically, there's a limit of we're only looking to do up to 4 farm animals. However, I'll give you a situation that we wrote. We had a situation where the insured had 10 goats that were on the property and they were used to manage the vegetation. That was an exposure that we felt comfortable with and we actually liked. If it was 10 cows or 10 horses, we would probably decline that risk. Standalone secondaries. We can consider standalone secondaries. We're going to want to know some more information about that secondary home. How often is the home occupied? When they're not in the home, do they have someone that monitors the home? be it a property manager, a neighbor, a relative. We do require an automatic water shutoff valve on all secondary homes. So once again, if it's a situation where they don't currently have one but are willing to install one, we can usually give you some time for that to be complied with, but it is a requirement in all secondary homes. In areas that freeze, your Truckee, your Tahoe, your Big Bear, what measures are the insured taking during the winter months when they are not occupying the home? Are they turning off the water? Are they keeping the temperature set at a certain degree? Does the property manager come in once a week? We mentioned the alarms already. We do require both at 1.25 million. We do put liability in all of our secondary homes. So depending on what liability limits you select for the secondary home, the primary home is going to have at least matching limits or higher. And we do need a copy of that because we need to upload that for the insured's file on it. This program is strictly owner-occupied primary and secondary locations. We don't do any kind of long-term, short-term, or vacation rentals. So no DP policies, no Airbnb policies. This is strictly owner-occupied primary and secondary homes. Ineligible risk. I won't spend too much time on this. It's pretty self-explanatory, but we don't do vacant homes, no COCs. We already mentioned we don't do mobile or manufactured homes. Go figure, a company that likes to write risk in the brush, quote unquote, brush areas will not do wood roofs. Post and piers. So your old school post and piers, piece of wood into cement footing would be a no-go with us. Huge cement caissons that are embedded into the bedrock would be acceptable. Exotic aggressive animals, including dogs. We have a dog list. I think most of you already have the appetite sheet with us. If you don't currently have one, but would like a copy, shoot me an email. I would be more than happy to provide that for you. It does list the dogs on our dog list. You would not be shocked by any dog that's on there. It's the same as everyone else's. Just because the dog's listed on there doesn't necessarily mean we can't write the risk. There is a dog questionnaire that is required. Just note, any dog that has any kind of bite history, or any animal for that matter, they had a bite history, we would not write the risk. Once again, it's admitted, we don't have the ability to put any kind of bite exclusion on there. We would just decline that risk. Dwellings owned by businesses, and if the home is on more than 20 acres, would not be acceptable. Coverages, like I mentioned earlier, it is a baseline HO3 policy. You can buy up additional extended replacement costs. Our options go up to an extra 100%. So we offer an extra 50%, extra 75%, and an extra 100%. Personal injuries available, water backup up to 75K, ordinance or law up to 50% of coverage A. We don't do auto, but we do offer a multi-policy credit. So as long as the insured has 100, 300, or 300 CSL with an admitted auto carrier, we do offer credit. It is not a fixed credit, so it's not like just 10% across the board. Excuse me. It is a rating factor. So depending on the coverage A of the home, territory, different factors in the home, it can range, but it can range from like 10% to 25%. So it is a significant credit on there. We do require a copy of the deck page because we have to upload it to their file for compliance reasoning. The auto does not have to be with your agency. However, because we do require that copy of that deck page, a number of our agents have been able to cross-sell the auto based on that because they're going to have to get a copy of that deck page to send up to us. So hopefully the hope is that you have another market that can provide them a better option than what they currently are insured with. This is the page that Sam kind of already went over, but this is kind of the submission process, and I'll kind of focus on things. So when you're making that selection, do any of these conditions apply, yes or no? Coverage A over 4 million. We don't want any of those submissions. Land over 20 acres, PCs 9 or higher. Fire department is 7+ miles from the fire department. Tenant occupied, we don't do any of the rentals. No wood roof, wood burning stove as a primary heating source, and mobile homes. And once again, you need that declination because from American Modern due to unacceptable wildfire scoring. And here is, we only have a new business moratorium in area due to aggregation in this area. So around the Grass Valley area in Northern California, we aren't writing in the zip codes there. We became very popular there, so we shut off writing new business in there. So the hope is that we shut it off early enough that we aren't going to have to take any action on those policies going forward. We felt that was a better way to do it, to shut off the new business early and not have to kind of affect those policies going forward. This is something that I strongly encourage you guys to take a look at. Like I mentioned here, if you're strongly considering the FAIR plan for your client and price is high importance, then it may not make sense to pursue a quote with us. Like I said, we don't want to waste anyone's time and look at submissions where we're not going to be great fits for them. So if the insured's number one goal is pricing, that wouldn't be a great fit for them. If there's another situation where the insured is like, you know what, I'm willing to write the policy with this company, but if they tell me to do anything to my property to make it safer, and they're not willing to do it, not a great fit for us. So those are the situations that I would tell you, just take a look at that. If that applies to this insured, your clients better than we do. Those probably would not be great fits for us. We're providing a breakdown to J.E. Brown of their agents and their submissions and such. So, we want to make sure that we're helping everyone, use their time wisely in this situation. So, if an agent submits, 100 risks to us and we haven't quoted or we haven't bound on any of them, that's not a great percentage for any of us. And it's not a good use of your time either to submit something that you aren't winning with us as well. So they give you a cost estimation here. So it's about $100 for every $100, it's about 73 cents for your coverage A. So you would take your coverage A that you're looking to insure for, 500,000, let's just say, and then it will give you the calculation on that. And then Sam also pointed out the application where you would upload your application and any other documentations you want to go along with that submission. We do require money upfront in order to bind the policy. So these are the payment options that we offer: full pay, 2 pay, 4 pay, 10 pay. Mortgagee bill. Mortgagee bill is the only one that we can issue without any money up front. We will bill the mortgage company directly. Also take note too, is if you are selecting one of these payment options on there, the initial down payment is going to also include the fees that are in the next screen. There's a $250 wildfire inspection fee, non-refundable, $75 policy fee, and depending on if they choose an installment method, it's a $3.50 installment fee per installment method. Mentioned earlier that claims are still all handled by American Modern, so it's the same 1-800-375-2075 phone number and the same information that they will need in order to get the claims process started for your insured. So I kind of already talked about the due diligence the underwriters do on the front end. I mean, the idea really is it's an admitted program. Once again, we're not going to be able to quote on every single risk, but our thought process is by underwriting each risk manually and basing it off their own merit, that we are able to help those insureds that are being unfairly clumped together because of their zip code. There's a lot of homes out there that are being unfairly clumped because of zip codes, because that's how the system is set up to write anything in this area. Scores are very high on a lot of wildfire systems. So, but looking at these risks individually, we can tell and look at the risk and see whether or not it would be a fit, and not just depending on our computer system say yes or no. But another huge component of why we're able to write this risk when a lot of carriers are running away from these types of risks is because of our educational process from our wildfire consultations. So we do wildfire consultations and inspections on every single one of our homes out there. These wildfire consultations are conducted by Rivington employees, all coming from a former firefighting background. CAL FIRE, U.S. Forest Service, hotshot crews. We have a former fire chief on staff. These are our full-time employees. These are the people that are meeting with your insureds. Pre-COVID, they were doing interior as well as exterior, and the insureds were, generally speaking, they would follow the inspector around their property, and the inspector would point out any kind of requirements, recommendations that they were seeing to make their home safer. And they would point out and kind of explain to them why. I mean, I've done a number of inspections back in my Chubb days, and I've done a number of inspections on this program as well. And I can tell you, once the insured meets our inspectors, they hear their background, they can hear their descriptions and the reasoning on why things need to be done. Their guard really comes down. The insured's guards come down. You know, it's a situation where when you first enter the property, they're like, oh no, it's the insurance inspectors. They're going to try to find ways to increase my coverage A or find ways to cancel me. Quite frankly, we don't want to cancel anything midterm. That's not a great money maker for us. So if there's a way for us to stay on the risk, we want to stay on the risk. So we want to work with the insureds and try to make their property safer on there. So, we're going to go out there right now with COVID going on. What they're doing is the insured has the ability to follow our inspector around. We practice social distancing. Our inspectors are masked up and gloved up. They'll walk the property with the insured, point out any kind of recommendations or requirements, and kind of go over any kind of alternatives or answer any questions that the insured may have. It's interesting to hear once the insureds hear the background of our team. I'll tell you one inspection I was on. We were leaving the property. It's actually the owner of one of the agencies that we work with. And we were leaving the property, and the owner stops us and says, "Hey, just a question. Ted was the inspector there. When you were fighting a fire, would your team have tried to save my property?" And Ted looks at him and he says, "Yeah." He goes, "You've done a lot of things to make it safe for us to be able to fight and try to save your home." He said, "Your neighbor down the street, absolutely not. We would not try to save their home." He said, and he's like, "Well, why?" And he's like, "Well, if you look at that property, the insured had tons of firewood underneath their decking and on top of their decking." He's like, "It would take us so many man hours to get that wood out from underneath that decking. We could triage another 10 homes in the time we could get half of that wood stack." So those are the things that they're doing. I had another meeting with one of our inspectors, and I was like, "What are the questions that you're hearing from insureds?" And he said, "Well, perfect example is one that I met the other week." He said, "We're on the back patio," and the insured goes to me and says, "Well, looking where I live right now, it's a likelihood that there could be a wildfire that comes in this neighborhood. What are your suggestions for me? What can I do?" And his response to him was, "Well, this is a perfect example on your patio." He goes, "You got metal patio furniture, but you have cushions that are on your metal patio furniture. These embers are looking basically for something flammable to land on." So he goes, "My suggestion, if you have time, is to take those cushions and throw them away from your structure, your pool." He goes, "Throw them into your pool if you have the opportunity to do that." And he goes, "If you have other opportunities," he goes, "inside your house," he goes, "you have curtains. Curtains are extremely flammable. So a lot of times the curtains can actually burn without the windows bursting because it creates enough heat on it that it can catch. Basically, your house would catch from the inside out." He said, "If you had the opportunity and you had time to do it, rip your curtains away, move them into the interior portion of your home away from the windows so it's away from that heat." So these are the kind of things that they point out, and they come out and they tell them the exact reasoning why it's important to do things like that. Once we always will make appointments with the insureds. We never appear on the property without the insured's permission. So our dispatcher will reach out to the insured, set up the appointment. If they were provided a copy of their email address, they will email them a confirmation, as well as a copy of the bio of the wildfire specialist that will be meeting with them. So that way they can see their background, see who's going to be going out there to meet with them to look at their property. Once the inspection is done, they provide a report to the underwriter. The underwriter reviews it and messages any kind of requirements and recommendations and provides a copy via email as well. By law, we only have 60 days to take action on new business. So, of course, we're going to look for those items to be taken care of within the first 60 days. But there may be certain situations where, the insured can't do something. We had a situation in Truckee where the insured had 3 requirements on there. They were able to do 2 pretty quickly. The third one was to remove the ladder fill away from the trees. They couldn't do it at that point because there was snow on the ground. So what the agent did was provided the documentation of the work that the insured had done already, message to the underwriter and had the conversation that the insured is willing to do that work on the trees. They just can't remove the scrub brush at this moment. So the underwriter, what they basically did was they said, okay, the insured is showing that their willingness to do it. They've already done some things. I will set the policy up to non-renew pending compliance. So the insured, as soon as the snow cleared out, had that ladder fill removed away from the trees, sent over the documentation to their agent sent it to the underwriter. We lifted that non-renewal. So once again, it's working with the insured, working with our agents to see whether or not we can stay on that risk. We want to do that. We had a situation where one of the insureds was kicked off the property, or one of our inspectors was kicked off the property. It's funny too, because he is the nicest person you will ever meet. And he ended up calling me up afterwards, like, hey, Kenny, just letting you know I was kicked off this property. And just like nothing happened. And I was asking what happened. He goes, no, the funny thing is, he goes, I really like this home. This home only had minor details that needed to be done. So as soon as I started trying to go over the details with the insured's like, okay, I'm done. And so I ended up calling the agent up. We had a conversation. He started laughing because he's like, yeah, I know this client. He goes, the client's a little hothead. So, my response was, well, we have a couple options. If the insured's truly not willing to do what we're looking for them to do, the underwriter, fire season, as you guys are full aware of what's going on now, fire season is 365 days a year here in California. So we can have the underwriter set the cancellation right now with legal notice. Or if you think that the insured will calm down, once you get a copy of the inspection, you can share it with them and go over those details with him to see whether or not he's willing to do it. If he's willing to do it, cool, we'll give him that time frame to do it. If he's not, and the agent stopped me, he goes, yeah, if he's not at that point, he goes, I will tell the underwriter myself to go ahead and cancel that policy. So once again, it's working with our agents, working with the insurers to make sure that, if we can stay on it, we want to stay on these risks. So this is kind of a little bit about what our inspection team is looking for. Truthfully, the first 5 feet surrounding the home is really, really imperative that they have that with as much non-flammable vegetation there as possible. Because in these wildfire situations, a lot of times it's not the actual wildfire that burns down the home. It's these embers that are flying miles away from the fire front. And basically, these embers are looking for ways to get something flammable to land into. So if they have sagebrush, mulch, any kind of vegetation that they can catch on fire, they're going to look to do that. If they have a weak venting system, they're going to enter that way and catch the home on fire. So we're looking to message that to the insured of what should be done to make their home more fire resilient. A lot of things that people should know about it already. You shouldn't store this firewood, just like that story I shared earlier. The trees should be limbed up 6 feet from the ground. You should remove any kind of brush or ladder fill away from trees. So they will go over that. The great thing about our inspection team is they take pictures of the areas that they're talking about. If it's a requirement, all the insured really needs to do is once they complete that requirement, take a picture, same picture, show that the work has been done, and send it off to the underwriters, and we can clear off that requirement. So this is something that came up after the Paradise Fire. After the Paradise Fire, the team got together and said, okay, are there ways that these homes could have been safer? And there were a lot of studies that came out that showed a lot of the homes burnt because of embers entering the venting system. So currently, all homes just about have a mesh that's behind the vents. Older homes have a 1/4 inch mesh. Newer homes have 1/8 inch mesh size. So the studies have shown that if you go to the 1/8 inch mesh size, a smaller mesh diameter, that it did a world of good in regards to helping prevent ember intrusion into the venting system. It's a pretty easy process. You can go to Home Depot or Lowe's, buy a whole roll of mesh for about $50. You can install it yourself. We had one of our clients was 70 years old, and she installed all the mesh and replaced all the mesh herself, and showed pictures of her doing it to the inspector that went out there. So that was great to see. There are also venting systems out there that the insureds can purchase that will actually melt when they're exposed to extreme heat. Those would be sufficient as well for our requirements. However, they're a lot more costly, so that is not something that we put as our requirements on there. We just require that they go with the 1/8 inch mesh size. Mentioned earlier that all of our wildfire consultants come from a firefighting background. Craig manages our whole wildfire inspection team. Craig comes from the insurance side, so he is the one that used to manage the inspection teams in California for AIG as well as Chubb. So, when we get a risk that's close to that $4 million mark, Craig usually has his hands in it because he is extremely versed in the high net worth field. So he's able to help the underwriters on that aspect. All of our inspectors have bios. If you guys are interested, I'd be more than happy to email you a copy of our bios for our inspection team, but for time's sake, I cut that out. But really quickly, I will show you the territories that they handle. Jay handles this area up here in Northern California. Ted handles the Bay Area up into the Truckee area. Laura handles part of the Bay Area, Central Valley, and Central Coast. Angelina handles this area in LA County, and Kevin handles the southern part of Southern California. So all of them, once again, if you are interested in getting a copy of their bios, I am more than happy to share that with you. that is all I had content-wise. I appreciate your time. And Sam, I guess if there's questions, I'll be happy to answer any questions that they have now.
Okay, well, we'll give people time to type in some questions, and I will, let's see if I can pull these up. Let's see. Okay. Can you see these, Kenny?
No, I can't see.
You can't. Okay.
No.
So I will read out questions that are not duplicated. Okay.
Okay.
What if we are in a zip code that is closed in American Modern, has closed writing there? Do we still need to do this? I think she's talking about maybe getting a brush map or something like that. So basically, if something's closed for American Modern or in a moratorium, do we still need to do this?
Yeah, and that goes back to the best pricing rule too. So the only ones that we can consider, it has to be declined because of wildfire scoring. So if it's in a closed zip code for American Modern and it scores acceptable still from a brush perspective, we can't consider those as much as we would love to, because we have different buckets, so to speak, and we don't have the same aggregation issues. But it has to be declined because of wildfire scoring in order for us to consider. So it has to be one of the declination reasons.
Okay, next question. I can answer this one. Will they accept secondary or vacation rentals? Yes and no. So Rivington will accept a secondary. What they will not take any kind of rental exposure. Secondaries, yes. Rental exposure, no.
Correct.
Will we get a copy of this presentation? Yes, I will send it out to everyone. Does E2 value count detached structures like AMIG garage or workshop?
No, it's so E2 value, what will end up happening is it pulls county records on things. So some of the information may not be 100% correct. So what the underwriters try to do at that point is if they're looking at aerials and they can tell that the home has an attached garage or some attached structure that should be covered under coverage A, then they would make those adjustments accordingly. If it's a true detached structure that should not be part of coverage A, no, that is not included in there. So if there's a need for, maybe they have a swimming pool or guest home that you need an increased other structures coverage on there, you'd want to make sure that's indicated on your application that's submitted.
Question here on acres. Yes, there is a max on acres. Maximum acres is 20. And are interior inspections still going to be done with COVID-19, or does the insured need to take pictures?
Good question. So right now with what's going on with COVID-19, we are not doing interior inspections. I don't know when we will reinstitute that. We won't do it until we feel comfortable. So with that, we are not endangering the insured or the inspectors on that, for that matter. So, for the time being, we are not doing interior inspections on there. They are just strictly exterior inspections. And kind of like I mentioned earlier, the insured has the right, if they want to follow the inspector around and, at a safe social distancing, they don't have to though. That's totally up to them. They will get a copy of the report later on as well.
I don't see any new questions coming in.
Okay.
Let me maybe give another 30 seconds to get people to type something out.
What I'll say there is my contact information is there. If you guys have any questions that come up in the meantime, feel free to shoot me an email. I'm happy to answer any questions that you may have. We appreciate the partnership. J.E. Brown's a great partner of ours. And, like I said, I'm thrilled the fact that through your relationship with J.E. Brown that you have access to this program. The hope is that we were able to help a lot of these insureds get out of ENS, get out of California Fair Plan. I mean, Fair Plan, as their to their benefit, they are very honest the fact that they should be case of last resort. So we've been able to help a ton of clients get out of that program. So we look forward to helping you and your clients going forward.
All right. Well, thank you everybody for joining us today. Thank you, Kenny, for coming over here and doing your dog and pony show. I appreciate it, man. We are going to let you guys go. We're going to let you go, and then just look out for an email with all this information that we'll be sending you, okay? Take care. Thank you.
Take care. Thank you.